Right now, there is a customer at a major bank with a perfect credit score, a verified home address, and a decade of social media history. They just got approved for a $60,000 loan. The only problem? They don't exist. They weren't born. They were programmed. Welcome to the year 2026. We've moved past the era of stolen identities. We are now in the age of the ghost fraud pandemic, where AI assembly lines are churning out synthetic people, Frankenstein identities built from bits of real data and digital shadows. By the time you finish this video, you'll realize that in the digital world, the person sitting next to you, or the person on the other end of your bank transfer, might be nothing more than a very expensive ghost. In this video, we are diving deep into the 2026 synthetic identity crisis to explain how criminals season fake people for years to bypass the world's strongest security, how autonomous agents are manufacturing IDs and performing deepfake video calls in real time, why these digital ghosts are causing a $40 billion hole in the global economy, and the new behavioral biometrics we are using to prove we are human in a world full of machines. For decades, identity fraud was simple. A thief stole your wallet or hacked your password to pretend to be you. But in 2026, that's considered old school. Traditional fraud has a victim who eventually notices a weird charge on their card and calls the bank. Ghost fraud is different because it is often victimless at the start. Fraudsters are now architects. They take a real social security number, often from a child, an elderly person, or a deceased individual, and blend it with fabricated names, addresses, and birth dates. Because these real identifiers belong to people who don't monitor their credit, like a 5-year-old or a Texas death row inmate, no one gets an alert. These are manufactured synthetics, sometimes called Frankenstein identities, because they are cobbled together from bits of real and fake data. The reason this has become a pandemic in 2026 is the maturity of generative AI. Criminals no longer need expert forgery skills. They have an AI assembly line. High-quality fake IDs, passports, and driver's licenses can be created in seconds with near-perfect design accuracy, including holograms that fool both humans and automated systems. But it goes deeper than just pictures. In 2026, we see the rise of agentic AI in fraud. These are more than just tools. They are autonomous criminal networks. These AI agents can independently generate utility bills for proof of address, carry out real-time deepfake video calls to pass onboarding checks, and even adapt their behavior if they get rejected by a security system. They function at a scale and speed that no human crime ring could ever match. The most terrifying part of ghost fraud is the seasoning process. These synthetic people don't just appear, grab a loan, and vanish. They play the long game. They are cultivated to look like perfect customers. Fraudsters use a trick called credit piggybacking, where they add the synthetic persona as an authorized user to a real person's high-score credit account. Suddenly, the ghost inherits a great credit history. Then they open small accounts, maybe a buy now, pay later plan or a basic credit card, and make perfect on-time payments for months or even years. While this is happening, AI agents are busy manufacturing a social history. They create social media profiles with years of human-like posts and interactions to pass any background checks. By the time this ghost applies for a $50,000 car loan or a massive mortgage, they look more reliable than most real humans. The end goal is the bust out. Once the synthetic identity has high credit limits, the fraud ring triggers a coordinated event. They max out every credit line and loan associated with that persona, and then simply delete the data. The financial damage is staggering. Losses from Gen AI-powered fraud are expected to hit $40 billion a year by 2027. In the US alone, synthetic identity fraud has already cost an estimated $30 to $35 billion. One ring in Miami used synthetic identities to steal over 700 vehicles, causing $40 million in losses before anyone realized the buyers didn't exist. Because there's no real person to complain, banks often misclassify these losses as bad credit or unpaid loans rather than fraud. This makes the ghost fraud pandemic a hidden risk that threatens the very solvency of lending institutions. In 2024, we saw a Hong Kong employee tricked into transferring $25 million because she sat in a video call with executives who were all deepfake replicas. Now in 2026, this is happening to claim life insurance and pensions. The life insurance sector sees nearly $30 billion in yearly losses linked to these undead claims. If a system asks for a proof of life video, a deepfake model can blink, smile, and answer questions in real time, making it nearly impossible for a human reviewer to spot the lie. As we move through 2026, the battle has moved to the Identity SDK, the software that handles your phone's camera during a verification check. Fraudsters have realized they don't need to fool the camera if they can bypass it entirely. This is called an injection attack. Instead of holding a photo up to the lens, the attacker injects an AI-generated video stream directly into the app's data path. To the bank system, the video looks like a live feed. Because the fake input is digital, it bypasses traditional liveness checks. This is why even your most secure banking app is under constant siege by context forgery, attacking the data pipeline rather than the content itself. So how do we stop ghosts? In 2026, we are moving toward digital trust and trusted intelligence. The old world of passwords and PINs is effectively dead. Banks are shifting to continuous verification. Instead of just checking who you are when you log in, systems now monitor your behavioral biometrics the entire time you are in the app. They look at how you hold your phone, the rhythm of your typing, and even how you move your mouse. These are patterns that AI agents find incredibly difficult to replicate. We are also seeing the rise of identity wallets and FIDO standards, which use hardware-backed keys to ensure that only a real person with a real device can authorize a transaction. We are currently in the middle of an AI reckoning. The bubble of overhyped AI investments is colliding with the reality of high-profile breaches caused by overprivileged agents and machine identities. By the end of 2026, 30% of enterprises will likely no longer trust any identity verification that doesn't include deepfake and synthetic content analysis. The ghost fraud pandemic has proven that seeing is no longer believing. Trust has become the most valuable currency in the world. The institutions that survive this era won't be the ones with the flashiest apps, but the ones that can prove, without a shadow of a doubt, that the person on the other side of the screen is authentic, human, and real. Have you or your company been a victim to similar frauds? Let us know in comments. The battle for digital trust is just beginning. If you want to stay ahead of the AI-driven threats of 2026, hit the like button and subscribe. We're tracking the evolution of fraud so you don't become a ghost in the machine.